Don't forget, you can reach the latest episode of Potomac Watch anytime. Just ask your smart speaker, play the Opinion Potomac Watch podcast. That is, play the Opinion Potomac Watch podcast.
From the opinion pages of the Wall Street Journal, this is Potomac Watch.
Welcome back. I'm Paul Gigot with Kim Strassel and Mene Ukwe-Barua of the Wall Street Journal opinion pages. And let's listen to President Biden respond to questions from the White House press corps about the vote in the House and how he's going to go forward on the debt limit.
Republicans say you're refusing to negotiate on the debt limit. They're saying you're missing in action.
Will you negotiate? They haven't figured out the debt limit yet.
Are you missing in action?
How about inflation, Mr. President? On the debt limit.
Will you meet with McCarthy?
When can America meet with McCarthy, but not on whether or not the debt limit gets extended? That's not negotiable. I noticed they quote Reagan and they quote Reagan all the time, and they quote Trump, both of which said, it says, I'm paraphrasing, it would be an absolute crime to not extend the debt limit.
Mene, is this position by the president sustainable as the debt limit nears? Is he going to get away with being able to say the House hasn't passed anything to raise the clean debt limit, therefore I don't have to negotiate? Seems not the strongest position to take.
It's not a strong position. And as I understand it, President Biden is really betting that the Senate is going to end up taking the lead here. So Chuck Schumer has already come out and said that the House bill is DOA, which is to say that he's not even going to consider it as a starting point for coming up with a counteroffer for how the debt limit might be increased. And I think President Biden is betting that Mitch McConnell and certain moderates among Senate Republicans are going to eventually be willing to start anew and collaborate with Senate Democrats on creating some new compromise, at which point President Biden will step in. But it's a risky strategy, and there isn't really any evidence that that's materializing, especially because so many Senate Republicans said, we are going to use the House Republican bill as our starting point. And so as long as the Senate Republicans stick together on this issue, it really seems as if the Democratic leadership is going to have to come from Biden, whether he likes it or not, as opposed to the Senate.
Kim, of course, the White House wants to keep the president out of it, keep him above the fray. But right now, we know that Chuck Schumer does not have 60 votes in the Senate to pass an increase in the debt limit. What does that mean? Well, first and foremost, it means he needs to sit down and talk to Mitch McConnell to deliver, the Republican leader, to deliver enough votes to get to 60. Now, Mitch McConnell, he's not going to go in there and say, well, yeah, Chuck, thanks, sure. Well, we're just going to give you what you want, a clean debt limit. He's going to say, I assume, that's a very interesting House bill that just passed. Chuck, okay, I don't like everything, but, there's a lot of good stuff in here. So what are you going to give us in return for the votes to get to 60?
Yes, and that's the other alternate route here. But this is the importance of the House bill as well. It wasn't just a victory for McCarthy in that he showed he could have some unity, but that unity now gives McConnell great strength. And we'll see, I bet for a while, McConnell is going to sit tight and not give Schumer any opening to negotiate, because there is a feeling within the Republican caucus that it's important that the president engage on this. And that's why I think they've been willing to hold off. They wanted to give the House a chance to prove they could get this done. But you've also had even some of the traditional Senate deal makers, folks like Susan Collins, come out and be very harshly critical of the fact that the president of the United States will not deign to meet with the Speaker of the House, and really suggested that this is unfortunate. They're holding their powder at the moment. We'll see if the pressure mounts now on Joe Biden to have that meeting from members of his own party or from the press. You heard the press corps there beginning to ask the question, why will you not do this? But it is possible that it ends up in the Senate. That could end up in a tricky situation, because what Senate Republicans might be willing to negotiate could be a little difficult for some House Republicans to swallow.
Well, okay, so that's certainly true, but we're already at this stage. We're now seeing some Senate Democrats come out, at least 2 or 3, I think, so far, saying, well, the president does have to negotiate now. That's why the White House didn't want that House bill to pass. So now that pressure is going to build. And I don't underestimate the pressure that the president's going to get from Wall Street now, because they're going to say that there's disaster looming, financial fiscal disaster, if there's a default. Now, the administration and the Treasury Department do have measures that they can use to make sure that interest on the debt is prioritized and paid. So there's no need for any default. I mean, something like $400 billion comes in every month in revenues, and the debt payments are something like a tenth of that, rising as a share, but still easily paid for. So the administration has some flexibility, but sooner or later that runs out. So Biden is going to have to, I think, come to the table, Monet. Is that what you would say? Or is the press going to give him enough cover to just to be able to blame Republicans?
Well, eventually he is going to come to the table. I think that, yes, it is clear that there are mechanisms in place to make sure that a default does not take place. The Treasury Secretary can prioritize making sure those interest payments get made. But the uncertainty of that moment of approaching that deadline and not knowing where that money is going to come from and exactly how would still be very chaotic for the economy. And I think you're right to point out that Wall Street certainly does not want that hanging over the markets. And so with some number of weeks before the deadline, Biden eventually will sit down with McCarthy, if not earlier. The strategy that he is taking so far, I think, is to delegitimize the Republican approach as much as possible. By waiting it out, he is able to say, these spending cuts that you're asking for and the other provisions in the House Republican bill are completely illegitimate. And when he finally does sit down to negotiate, it will not be because he's validating their approach to cutting spending. It will merely be because he's being the adult in the room and stepping in to save America from a chaotic default. So I think by waiting it out, he's betting that the press will spend the intervening weeks demonizing Republicans and blaming them for leading us up to the brink of disaster.
Demonizing Republicans, always a national pastime for the Beltway press corps. Okay, so we have Kim, and then we're left with the circumstance of, let's say, I don't think McConnell's going to cut a deal without consulting with McCarthy, number one. Okay?
No.
So they're going to try to work out, okay, what do you think you can get through your conference? And then McConnell will go to Schumer and say, okay, we're going to talk about the details. One of the things I think that McCarthy will have to give in on is the extent of the length of this debt limit increase. The debt limit increase now that the House voted for is estimated to run out in 2024, some point before the election, maybe late spring or early summer. And I think McConnell's going to say, I'd like to get that past the election in 2024, and let's kick that into 2025. And I think that's one thing that McCarthy will have to give on. But if they can get work requirements in return, if they can get spending restraint and with annual caps in return, I think that would be a significant victory for the House Republicans. The question is whether McCarthy can get that through the conference one more time.
I agree with you completely. The reason that they put the debt limit extension to the March or a certain number was because they wanted that as a chip when they went in to negotiate. That was very deliberate because they know that the president is going to ask that this get moved beyond the election. So that was a starting point, understanding that that was going to change. My understanding from speaking to members is that there have been discussions about, well, what does a caucus really want out of all the provisions that they put in there? What's the bottom line? And what I'm hearing is those spending caps, the limits, putting us back a couple years in terms of domestic discretionary spending. The work requirements, very, very important. And I'm happy to hear that. I think that it's just such a crucial point. It's also, as you know, a very popular provision out there with the public. I think it's also important for the economy as well, too, given the very tight labor market and the problems we are having getting people going back to work. And then apparently one thing that's under discussion is just how strongly Republicans feel about it rolling back at least some of these energy provisions, because they view that as so crucial to the economy, too. The Inflation Reduction Act is basically a first government step toward micromanaging the energy sector. That's already having consequences. In addition to spending, there's just simply a lot of regulatory and policy aspects of this that are very bad for energy production and really distort the market. So I believe that there is some real appetite to at least get some of those canceled. But this will be the big question, is how much can Republicans rally around a final baseline package? Are you going to have more than those four who already defected say, no, we want it all, or we're not on board? That then really weakens McCarthy's hand, and this is going to be his next huge challenge.
And remember, if you show you can govern once and pocket some political and policy victories, even with the narrow majority, this isn't the end of Congress. You have a budget to do. You have other things that you can do. So as long as you show you can hang together with 218, 217, and prevail on the House floor, you can get more done. All right. Before we go, Monet, let's say a word about the gross domestic product report for the first quarter. Increased 1.1%. Disappointing. Slow growth. Consumer spending stayed strong, but investment was down. Private investment was down. Government spending contributed 0.8% of that 1.1. So the government is not struggling, but private investment down. What do you make of it?
Yeah, well, the top line number, as you mentioned, is disappointing. I mean, this is the lowest growth that we've had since we did have 2 consecutive periods of negative growth in the beginning of last year. A lot of people thought at that time that the downturn was coming, but thankfully the economy rebounded in the intervening time. But now we've seen reductions for the past 3 quarters, and it does seem as if the smart money again is that we could tip into a recession, and it might be a longer and deeper one than people thought just even a short time ago. Like you said, the investment slowdown is the biggest contributor to the slow growth that we got in the first quarter of this year. And it just seems as if businesses are struggling to borrow, and that consumer spending might be sustained for the time being. So companies are still able to sell their products, but they know that there's likely a slowdown coming very soon. And so in terms of setting up their business for the future, they're investing just a little bit less. And in addition to the economic factors in the background, there are also certain policy factors that have contributed to that. We've talked before about changes in the tax climate. You had new taxes being introduced in the Inflation Reduction Act, which increased the cost of doing business. And you also had tax provisions from the Tax Cuts and Jobs Act of 2017, which have expired or have started to expire over the past couple of years. And all of these are increasing the cost of doing business. So you have an economy that is sluggish in its fundamentals, topped with some policy constraints, and all that is leading businesses to pull back a little bit on investment.
Ed Hyman, an economist I follow of Evercore Partners on Wall Street, is predicting negative growth for both the next 2 quarters of this year, the next 3 quarters of this year, and even the first quarter of next as the Federal Reserve interest rates hit more acutely. We'll see if that happens. That's one of the big questions. What is the impact of monetary tightening? When does that strike? But I would point out, it's very interesting. The markets actually took this news about first quarter growth and rallied. And of course, another report that came out today was that unemployment claims, jobless claims, actually fell. New unemployment claims actually fell unexpectedly. So this is a tough economy to figure out. I certainly don't profess to know where it'll go. Otherwise, I'd probably be on a beach somewhere. But if I could foresee the future like that. But we'll see, and let's hope we don't go into a recession. Monet, thank you. Kim, thank you. Thank you all for listening. We're back every day with Potomac Watch, so please join us again every day on Potomac Watch.